Let's focus on the global picture very quickly. We've got Greece shutting its airports as we've got thousands of public sector workers going on strike there. And then we've also got Belgium and France trying to save Dexia, that bank. And then on the other hand, on the other side of the Atlantic, we have Ben Bernanke's comments, which seem to help sentiment slightly today.
Yeah, I mean, the worry at the moment is that this debt problem seems to be moving from the periphery to the core of Europe. Nobody's quite sure how deep the problem goes in terms of Spanish, Italian banks, etc., holding this Greek debt. We haven't seen a unified response come out from Europe just yet, although the Japanese as well as the Americans have opened the window and said, look, you can lend as much as you need. So I think we are starting to get a bit of traction, although the world at this point in time seems cheap. I think it could get a bit cheaper going forward.
So it seems cheap to you at this point in time, but you see equities falling further from these levels. On the local front, what are your thoughts?
Look, I mean, locally we've been sheltered from the worst of the fall by the rand, and you can see today a lot of the companies that are holding up are trading up in London, such as the likes of Billy's and Anglo's, Old Mutual, SAB, etc. So it's the rand more than anything else. I mean, some of these markets are down, call it 25% for the year. We're only down about 11 or 12. So we have had help there. I think locally in South Africa, some of the sectors to me do look a bit full, such as the retailers, and the banks I don't think are getting much traction. South African consumers still very strapped. But the mining counters, in my mind, I mean, commodity prices have corrected quite a bit. Last time, I was chatting, we were saying commodity prices need to either come off, 30%, or these counters need to re-rate upwards. It seems that the commodity prices are re-rating down. But, the first quarter's in the bag. We expect trading updates. These companies are still very, very healthy. I mean, there's no real leverage in the industrial or the mining houses. I mean, they've scrubbed their balance sheets. They've got a lot of cash on those balance sheets.
And they're holding back at this point in time.
Yeah, I mean, they're rolling out capacity, but I think it's what the market's pricing in now is a severe recession, almost a depression. And I'm not sure that the world is actually moving into that phase when there's just one sector of leverage left in the economy.
Let's talk about gold, because many questioning, its safe haven status, whether it's still seen as that form of asset class. We've got it trading around $1,600 at this point in time. We see smaller producers now hedging the gold price at these levels. Do we see the gold price, is this a signal that the gold price is slightly elevated from their perspective?
I think, yeah, I mean, they've probably got the best visibility in terms of, this is what they do. They focus on the gold sector. I mean, the reality is the last time gold was trading at this ratio to platinum was in the 80s at the heights of the gold bull market. So, I mean, in my mind, gold has been in a bubble. There's no industrial use for it. I mean, they're building more warehouses to store the stuff. And, as interest rates move up, the carrying cost of gold with no dividends, etc., will, to me, platinum at least has a use. It's an industrial type metal.
Are you a platinum or gold?
No, platinum.
So I mean, platinum all the way, and you see platinum as a precious metal to put your money in over and above gold. You know
what? I think if you look at what the auto manufacturers in Europe are forecasting, they're forecasting record sales, particularly out of the East. And platinum has an industrial use in auto catalytic converters, whereas gold has no real use besides jewelry and dentistry. So in my mind, at some point in time, like with copper, even though the prices have fallen, there will be a marginal buyer to step in and start, buying it back up. There will be a supply and demand. Equilibrium, markets will move to equilibrium.
Yeah.
Whereas gold, I mean, what's the equilibrium? Once people start selling it, I mean, you can look at
it can plummet quite significantly in one day, as we've seen, and it's fallen, more than $300 since its high.
100%. To me, it's an animal spread. And a lot of these gold miners are marginal. They're not making money, even at the price of gold at $2,000, call it. They still weren't really making money. Harmony was making 30 cents a quarter.
Yeah.
So, I mean, what price do they need?
Let's focus on the retailers here in South Africa. Pick n Pay trading update today. Is forecasting first half HEPS falling by between 35 and 45%. They've said turnover has grown by 7%. It's still South Africa's second largest retailer. The question is, for how long?
Yeah, I mean, I think this trading update was a lot worse than what the market expected. The consensus was for maybe 10% down in the first half. This is going to call it 40% down. It's a lot worse. I think there's been a lot of cash sucked up into this Franklin's business to fund the losses there. Their DC strategy doesn't seem to be on track as much as they would like. And they've had to increase their borrowing quite a bit to fund the dividend, as well as to roll out their distribution network. So
they're borrowing a lot to fund dividends, and they're not making money to pay the interest on these borrowings. I mean, that's a huge concern.
It is, their last.
And you can see that by the share price down almost 4%.
Yeah, I mean, 6 months ago, Woolworths was 23 rand, or beginning of the year, Woolworths was 23, and Pick n Pay was 49. They're on par now. Woolworths is also 35, 40 today, call it.
So if we look at Woolworths' share price, we've got one of the banks coming out yesterday saying that they see upside potential in the share price. They see it hitting 42 Rand 50, 35 Rand 25. What are your thoughts on the price?
Look, personally, we really do like the counter. I do think at this point in time, with as much uncertainty as is in the market, and it's held up reasonably well. And I think you might be able to get it a bit cheaper. Although I think between this counter and ShopRite, I mean, there's a lot of growth potential going forward as they increase their ROEs. I do like the African expansion. I do like the fact that they've rationalized their inventory. But yeah, I mean, the retailers look reasonably full compared to what else is value out there at the moment in the market.
Let's quickly talk about the banks, because we've had the Deputy and the Finance Minister revising down their GDP forecast. First Rand trading high today. What are your thoughts on investing in banking stocks?
We like First Rand. I think the banks overall, if you look at corporate South Africa, globally corporates, but corporate South Africa has a lot of excess capacity, and then they have a lot of cash on their balance sheets, and they need to go through both of those before they come back to the banks to borrow. So I don't think there's a huge rush to, for banks to be. There is no real growth in the corporate borrowing. Nobody's rolling out, capacity aggressively. On the private side, you can see the residential market's not really improving. Motor vehicles have been quite impressive. I think people are more concerned in holding onto their cars because that keeps them, in their job rather than their homes.
Yeah.
But I don't think, the merger and acquisition activity, investment banking, all those are down quite a bit. So I don't see any huge rush to go into the banks. I think it's a bit early. But at the same time, our banks are probably some of the safest in the world. We've been protected from ourselves by exchange control. So the banks are completely under-leveraged. Their tier 1 ratios are, more than strong. I mean, there's a lot of cash in these businesses.
Yeah, so stocks to perhaps hold on to but not be buying at these levels.
Yeah.